Gold, in line with the analysis that you'll be able to see um, higher up in the chat from earlier, pretty much at the start of my day, at 7 or 8 a.m. ish, New York. I was looking at the gold price and noting that, let me see if I can, let's put this onto a daily chart. Yes, that was right. So I'm just trying to get my bearings on this. Right, nice clean chart for you. So yes, I was looking at this low. This low here as a strong low that came in for a, so we've come down once, twice, 3 times. 3 times this has proven to be a strong area of support. I'm not going to put a level on it, just an area, because it hasn't come down to the same level every time, but it's come down to this area. Okay, so we'll call this an area of demand. And we've reacted from there. Now, it's broken not only this swing point, but it's also broken up here. So this is a very strong low. I say very, I mean it's a strong low. So technically, we're in bullish territory on the backside of that bearish trend. So we're now relying on that as a counter trend line, bullish. If we zoom into the daily chart, this here was a strong low. It's resulted in a break of this high. And we're currently pulling back into the impulse. So we've got the breakout, we're pulling back, impulse correction. So the question is, where from here? Well, the overriding outlook is bullish towards those highs. But if we zoom right into the here and now, we can put a scenario out there that we are heading lower, having broken structure on the inside of this bullish breakout to the upside. So coming down to the day itself, we can look back on the week and note that on Monday we pulled away from Friday's highs, last week's highs. Tuesday we came up and were rejected there again. On the same day, in fact, we broke Monday's lows, and today we broke Tuesday's lows. So for me, that leaves the outlook bearish momentarily, for today at least. So in line with yesterday's move lower, we've pumped up into the breakout area, which was Monday's lows. That's acted as a resistance. Okay, and that's what I was talking about at the start of the day. So that has played out to the T. I'm essentially going over the analysis from earlier. That's fine. And then we've moved back below the closing price of Tuesday. And there are prospects of a continuation to the downside to break, well, it's already broken Tuesday's lows. So that was why we had a bearish bias. So we were just pumping up to come lower again, and we might get that continuation to the downside, in line with, let's have a look, the dollar remaining above the closing price of Tuesday. That's the DXY index, measured against a basket of currencies. So we pumped up in line with the analysis at the start of the day. We've driven into the length across the board versus the euro, sterling, Swiss franc, etc., the yen. So the dollar has tailed off throughout the Wall Street open, equities hours, and now we're starting to pump back up from the closing price. Lo and behold, this is acting as support. We might get a continuation to the upside in that respect, in line with the bullish analysis on the dollar. I know you've asked for gold, but this could be playing out for a bearish scenario for gold. Bear in mind, however, that gold has actually decoupled from its negative correlation to the dollar. So it's actually been trading in line with the direction of the dollar. But besides that, we've got the base case for a continuation to the downside on a break below the lows of the day. Now, in terms of a target, well, look at the ATR. We get about $22 of movement on any given day. Well, on average, over the last 21 days, the movement's been about $20, and we've seen about $16 of movement so far today. So we could see some more. And in that case, from the highs of the day, $22 would take us down to around about 1970. And I'm pretty sure I had 1976 as a line in the sand, I think earlier on in the week, if memory serves me correctly. So yeah, that still is a line in the sand. So we still need to break that with conviction. And that opens up a run into 1970 as a psychological level, as well as the ATR. But it's Fed day. I mean, we could easily expand on that, or we might just head higher. No idea, but that is my bias for now to the downside.